Ladies and gentlemen, thank you for joining me. This is Christopher Aaron. This is the iGold Advisor channel. It is the 10th of February in the evening hours, East Coast time in the United States. And we have a breakout in the silver market. We will be getting to that action today. What I expect to see in silver should this breakout continue. And I also want to mention to anyone who is interested, I will be launching my premium service on the 22nd of February. That'll be the last week of February. That will be out. There will be a link to that below for anyone who's interested. We will begin today by looking at the gold market for the last 3 days. And as this video is being recorded, we have already opened in Asia for Thursday morning. And look at the strength coming into gold, clearing 1200 in Sydney. So very interesting to see this. As someone who has followed this market for a number of years, I will tell you that when you begin to see strong moves occurring in the Asian markets, it signifies a market that is picking up momentum. It's picking up interest. So just something to keep a note of. As we see, we had on Monday a strong day. Tuesday was basically flat. Today, Wednesday, closing in the mid-range for the last 3 days and then seeing this spike in Asia above 1210. Let's see how this closes starting tomorrow. I'll put this in perspective now. Gold on the 2-year time frame. Now, this is very important to pay attention to if you're investing in gold or in silver, because, of course, the two metals are related. And what I want to bring your attention to is, so this is the closing action as of today, Wednesday. And notice that we have gotten into the vicinity of the window that I was looking at in the last video. This 1200 to 1220 region is my likely target for an interim high and for a level that needs to be exceeded for this primary blue color downtrend that we've been looking at for the last 2.5, almost 3 years now. So we want to see this broken to have a strong confirmation that this was the final low around 1045. Now, even if the price of gold does not break through this downtrend here in the next few days or week, there is something to make note of here. And that is that the price has exceeded the high that we hit in October. If you follow my mouse right here, the high that we hit in October was right around 1190. So the price has already exceeded the October high. Now, as someone who follows the swings in the markets and who trades based on some of the technical patterns, of course, the technical patterns are simply showing us the fundamentals. They're showing us what's happening underneath the market. So we're looking at a map of the last couple years of action. What I'm seeing in the technicals here, when you have a market that has exceeded a significant high from several months ago, you now have what we can call a higher high. So gold has made a higher high than it has in October. And if you notice, going back from the past 2.5 years here, we had this high right around 1420 in the middle of 2013. And then you had a lower high and a lower high and a lower high and a lower high. And we now have a higher high. So this is one of those clues that the gold market is getting ready to break out of its long-term downtrend. So this breakout may not be imminent, as in the next 2 or 3 days. In fact, I would be not surprised at all should we see a little bit of a rounding and a little bit of drop over the next few days. to the better part of a week or two, perhaps corresponding to our short-term uptrend here. However, I want to say again, this is very significant that we have seen a higher high. We've broken the series of lower highs. And one of the trademark definitions of a bear market is lower highs. So we're seeing that shift now. If anyone wants to see this type of analysis in a print format, perhaps to share with someone who just is not going to watch a video, or for whatever reason, I have an article that I've written on this very subject, the technical indicators of the shift from a bear market to a new trend of rising prices that is pending. That link will be below if there's anyone who would like to share that with anyone. So we're zooming that in here in gold and looking at the 6-month time frame, and we can see that very clearly here, a higher high from October. Of course, we're looking at the GLD fund, so these numbers on the y-axis do not match up 100%, but the ratio is correct. So on any weakness here in gold/GLD, we want to be seeing this short-term uptrend that we had forming from the lows in December. We want to be seeing that hold. And then should that hold, we're looking for the next surge to break through that 2.5-year downward trend. Zooming this back out for anyone who is new, just a very quick high-level overview for you. I think it is so critical to view these markets in proper perspective. So here we are looking at that 2.5, 3-year downtrend shown in the royal blue. The critical point to note here is you have a market that is looking for its low. It's looking to confirm its bottom above a multi-decade consolidation. The high in 1980 was $850 an ounce. It spent 28 years below that level. Let's call that a generation. It broke out for 2.5 years and has spent 5 years coming back. And this is what we call a retest of a multi-decade consolidation. And I wrote an article a number of months ago. I'm going to have the link to that below also. If you want to learn more about the significance of these multi-decade breakouts, these are rare patterns that form in the grand scheme of things. The only thing that comes to mind, a similar analogy, is when you look at the Dow Jones Industrial Average from roughly 1959 through 1982. That market consolidated in a similar way as gold consolidated here. And when the Dow broke out in 1982, it led to roughly an 18-year advance over that. So what I'm saying is gold is just beginning what is going to be a multi-decade advance. That print article I will list below because I think that's really important for anyone who is just looking at the gold market for the first time to keep in mind. We look at the gold miners as a leading indicator, right? So these companies their prices are leveraged to the price of gold. And if anyone is interested in more detailed analysis on the gold mining sector, you can check out my sub-channel, which is iGold Power. And I go through that here, but just briefly, for the purposes of physical gold and silver investors on this channel, we still want to pay attention to this because this is an impulsive move higher. This is a term that I would derive from my study of Elliott wave analysis. And even though I don't consider Elliott wave to be perfect, no form of analysis is, there's one thing that I really do like about the way that they analyze markets, which is their discussion on impulsive moves. And when you see this kind of move that just rises 50% over the course of 2 weeks, this is what we would call an impulsive move. People are just saying, buy, get me in, I don't care what price, get me in. And so we're looking at the sector here that tends to lead the price of gold. So when we see this significant impulsive bottom formation forming here, we know that the price of gold is looking for a bottom at some point in the intermediate future. Mind you, that could still include some lower prices over the course of the next few weeks. But we're looking at that coming up over the next few weeks to few months for the price of gold. So just another leading indicator here. We always look at the silver market as the two are very closely related, but they have their own intricacies. And here we are looking at some nice silver bars. These look like 10-ounce silver bars. A beautiful display. So let's look at the spot price of silver here over the last 3 days. So in the last video, I mentioned that what we want to see if we're talking about a breakout above $15 is a surge higher. And sure enough, on Monday, we got that surge and we we hit almost 50 cents higher than the level that I was looking at, the $15 level. We had a strong day on Tuesday, falling back a little bit in Asia, but notice that dip was being bought here in the United States and in London as we went through the day today on Wednesday. And notice we are gaining some strength here as we start Thursday in Sydney. So this looks like a nice break to me. As someone who studies these patterns, I like to see this kind of move after the break. So we're looking at silver here. This is the bottoming wedge formation that we've been looking at for a number of months. This is very similar to the pattern that we saw in the mining complex, a similar break, perhaps a week or two behind. And we can see this break right here. Let's zoom this right in so we can see it more closely. So we had that nice surge on Monday. Now, from my standpoint, here's what we want to see. If you are bullish on silver, here's what you want to see. We've had multiple attempts to break through this bottoming wedge pattern over the last number of years. The last attempt to do that in late October was a false attempt. It spiked higher for a few hours and came back down, which led to roughly a $2 decline after that. So you can see the importance that I place on these trend lines is that the price action holds above the trend line for a number of days. Anywhere from that to a few weeks would be ideal. So as someone who is bullish on silver, what I want to see is on any weakness for this price to not close below this blue line. Okay? To perhaps, if there's some weakness, to just sort of skirt the upper edge of this blue line over the course of the next couple weeks. That's what I want to see as someone who focuses on the technicals. And should I see that action, should I see no closes below this, I am willing to call this a very significant and legitimate long-term breakout. So what are we going to be expecting? Should that hold? What are we going to be expecting here in silver is a rise from somewhere in the vicinity of this line up to the 1625 level, which represented the top from our false breakout in October. This should be the first impulsive move. And mind you, so this move would be basically coming from roughly 1360 up to 1625. That's about a 20% move over the course of these couple months. That's what we should expect first. After that, there's going to be a question mark. And this is based on my study of these bottoming wedge patterns across multiple markets, multiple commodities over multiple time frames. There's going to be a question mark. One of two things can happen after we confirm this breakout. So mind you, we're still talking about a market that has formed its long-term bottom, but we're talking about what might happen after that bottom now. So this can go in two ways. One is that in a strong market, the commodity will just continue to surge higher. It will basically not give people an opportunity for a pullback. And that's what we would expect to see in a really strong market. I'm not predicting this yet. I'm telling you what the options are at this point. The other possibility for a market that perhaps needs some more time to consolidate, it needs to find its base, is that from this breakout, we will see a decline over the course of the subsequent 1 to 3 months. And this will be a gentle back and forth kind of decline to somewhere in the vicinity of this former resistance level, right around 1450. At the absolute worst, we would be looking at somewhere in the lows here. And so the market would round out over the course of this summer, and then we would see the next surge higher once the next opportunity for people to buy in these lows emerges. And people who failed to buy here step in at this point and they say, now is our last chance. So that would be if the market backs out. Now the problem, as someone who advises individuals who are looking to perhaps, establish positions here for the first time, is I can't tell you at this point which way the market is going to go. Should this breakout remain legitimate? Should we hold above this former line here of the wedge? I can't tell you which of these two paths is going to play out. So, I get a lot of questions from people who are saying, is now a good time to buy silver? And this is a really independent kind of question. There's no one answer that can satisfy all people. So much of it depends on your individual position, your individual risk tolerance, and your time horizon. So for example, someone who has been buying silver for the last 3 years, buying in all these lows, and maybe who has 500 or 1,000 or 5,000 ounces of silver stacked up, they can afford to wait. They can afford to see, do we get this spike here and then does it back off? And do we have another opportunity in the 14s or perhaps even the upper 13s this summer, right? Because if the price continues to accelerate, they already have a sufficient holding, I would assume. For people who are just looking at this market for the first time, the risk to you is that the market begins to run away and that we do not get a significant pullback and that it begins to just start rising. And so then you'd be kicking yourself $2 or $3 higher if you weren't buying right now. Again, I'm not giving a final prediction. I go based on technical analysis, which is fairly objective, and it's objective even when I can't give you an answer, which is right now. All I can say is we've had this breakout, and if this holds over the next couple days or couple weeks, and you don't have a sufficient position, you have to start thinking, is this going to be one of the last times to buy in the 14s or the low 15s? Of course, over the next couple weeks. I'm not talking today or tomorrow. So that's how I see the silver market going forward. And of course, I want to make the point to anyone who's new that this low that we are forming in this vicinity is perfectly correlated with our long-term rising trend line from 2003. And that silver is still below its 1980 high. And given a 5 to 10 year time horizon, for those people looking at this from a long-term perspective, it is my thesis that silver will be matching gold and will be exceeding its 1980 peak in this time horizon. So there is some excellent value in silver, I believe, if given a long-term perspective. In summary, we have that mining complex early warning indicator. We are looking at the 1220 region for gold to see that line in the sand broken, and silver must hold above the broken trend line at 15 for this break to be valid. A final point. Although these markets are starting to pick up momentum and some steam and some interest now that we've had this first initial break in the silver market, I want to encourage people to not ever fear that you have missed the opportunity, because there will always be pullbacks. Even if this market begins to accelerate, there will be pullbacks that shock people along the way as it's rising. So you will always have those opportunities, and furthermore, you will always have opportunities if you are an individual who is willing to think outside the box, whether it's in this market or in another market. So thank you for being with me. For anyone who is interested in those articles or the premium service, those links will be below. I will see you this weekend. Have a nice rest of the week.